mortgage your entire company in pesos, sell equity in your company in pesos, convert it all to dollars, and then get the dollars out of the country. If you want to create wealth, you borrow $1 billion and you buy $1 billion of property and you start with $1 million of equity. A sliver of equity, and what you're doing is you're going short the currency and you're going long the property. So if I told you, let's go to Argentina. If I told you in Argentina the peso is going to go from 1 peso to the dollar, to 5 pesos to the dollar, to 10 pesos to the dollar, to 20 pesos to the dollar, to 40, to 80, to 100. The black market rate right now is 210 pesos to the dollar, 220. If I told you it was going to collapse from 1 to 220, and you had 20 years of notice, what's your best strategy? Take your million pesos, convert it to dollars, and you're going to have 220 million pesos in 20 years. You're going to look rich. Better strategy is borrow 1 million pesos, convert it to dollars.
Wow.
Best strategy would be mortgage your entire company in pesos, sell equity in your company in pesos, convert it all to dollars, and then get the dollars out of the country. Because if they're in the country, if the million pesos is converted to dollars in a bank in Argentina, then the government will basically pass a law, force your dollars to be converted back into pesos, devalue them. And I happen to have some experience with that because I actually had $1 million in Argentina during the last currency collapse. They converted it to pesos, they devalued it 10 to 1. A day later, I'd lost 90% of my money. In the second quarter of 2020, we had what we'll call a K-shaped recovery. But in my opinion, the K-shaped recovery was Main Street got shut down and locked down, and if you manufactured anything or provided services, your business was wrecked. And then Wall Street had a rapid, miraculous recovery within 6 weeks of the pandemic, and they had the best year of their life. And I could have basically sat on a floaty in my, pool in the Hamptons and got a 30% return in that year doing nothing, which would be the best year of my entire business career if I'm a financier. But if I was running a restaurant or running a manufacturing facility or doing something with raw materials, I would have had to generate 30% more cash flow to get nothing. And when the Fed loosened the reserve restrictions on banks and allowed banks to, in essence, print infinite money with no reserve ratio, then the economy was flooded with liquidity. What happened was the stock market immediately recovered. People thought that was something good. It wasn't good, it was the money collapsing. It was the value of the dollar collapsing in real time against scarce assets. What I realized is maybe the money supply is expanding faster than 0 or 2% a year, and I started on a search and I discovered the Bitcoin Standard and some Austrian economists. And what I realized is the money supply had really been expanding at 7 to 10% a year for the last decade. That's why the S&P index is appreciating at 10% a year for a decade. And once I realized that assets like the S&P and equity portfolios and real estate are driven primarily by monetary policy of the central banks, then I realized that holding money at 0% interest when the money supply is expanding at 10% is losing 10% of your wealth a year. And then I realized that in fact the money supply was expanding not at 10% but about 25% a year starting with the pandemic. And I was going to lose half my wealth on that treasury within 36 months. And once I realized that, I realized I was destroying about $250 million of shareholder value if I did nothing. I started thinking I needed to do something. So in an environment where the money is losing 15, 20, 25% of its value a year, and you're sitting in all cash instruments, you either need to give the money back to the shareholders or you need to invest it in some scarce desirable asset. So the reason I did what I did at MicroStrategy was, if I gave the $500 million back to the shareholders, that was $60 a share. The stock was $120 a share. I basically was valued at 1 times revenue plus the cash. When I gave the money back to the shareholders, the stock was going to go to $60 a share. When that happened, all my employees' stock options were going to be underwater, right? And we were going to get beat to death by Amazon, Apple, Facebook, and Google. They were just going to steal all our employees when the stock crashed. And that would mean that instead of growing 5 or 10% a year, I was going to be shrinking 5 or 10% a year. Instead of my cash flows doubling or tripling, they were going to be cut to zero. And once your revenues start falling, your cash flows go to zero, you have no capital, all your employees quit. When your employees quit, the company unwinds, we're going to go to zero. We decided to do something, which is invest the money in a property or in an asset that would go up faster than the rate at which the money was collapsing. And that set us on a search, and we considered buying a portfolio of scarce art. I thought about $500 million worth of real estate.
Really?
Yeah, I thought everything. Do you buy gold? Do you buy art? Do you buy real estate? Do you buy a portfolio of stocks? We put out a press release to our entire shareholder base when the stock's 120, and you can go read it today. It said, over the next 12 months, we're going to buy back $250 million worth of our stock, and we're going to invest $250 million worth of our treasury assets in some asset in order to avoid inflation. And we listed a litany of these things, and we included Bitcoin as one of the things we're evaluating. Ultimately, so we went from first principles. We said, you have a bunch of money, say $250 million, you want to hold it for 100 years, give it to your great-grandchildren. Where do you invest it? Well, if you put it into the dollar is losing, at least, it's been losing 7 to 10% of its value a year for 100 years. That means over the course of 100 years, the dollar loses 99% of its value. My house in Miami Beach was purchased for $100,000 in 1930. Okay, I bought it for $14 million.
This is the villa.
In 2012. Today,
50.
you know, yeah, so 100,000 to 50 million in less than 100 years. That's not the house getting more valuable, that's the currency getting less valuable. Okay, if you took any amount of money, take $100 million in the year 1900 and invested in any currency in the world, you would have lost 100% of your money in every currency except for the dollar or maybe the pound. Every currency collapsed. The winner of every war in the 20th century was the United States. And so the winning currency loses 99.5% of its value. Everybody else, you lose everything. Take $100 million worth of money and buy land in Florida. Tax bill's $2 million a year. If you buy property in Florida, it's 2% property tax a year. It gets assessed up every year. You have the ownership of the land for about 20 years before the government takes it back from you. You don't own your
Plus the
your
maintenance
property.
of the land.
If you want to move money through time, how do you do it? You can't do it with the currency. The money is broken. The money was always broken. It's been broken for 100 years, losing 7 to 10% of its value. But in hyperinflating economies like Venezuela or Argentina, fill in the blank, the money loses 20, 30, 40% of its value a year, sometimes 80% of its value a year. In that case, you can't even carry money for a decade. You might not be able to hold money for a year in those economies. Bitcoin is digital property that you can teleport anywhere in space instantly. And it's also perfected property with the lowest maintenance cost. You know, you don't have the property tax you have on a building. You don't have to repaint the thing every 10 years. You don't have to worry about leaks in the roof.